Well, time to have a look at markets now. And when we start off with Asia, those markets on that particular front fluctuated as investors weighed the implications of rising energy prices and risks from China. When we look at what happened in Japan, that market slipping, the Hang Seng Index in Hong Kong seeing modest gains. When we look at what's going on in China, Shanghai, what was noticeable was the material stocks. Those happened to slip on concerns that the power curbs are hurting the manufacturing sector. And let's not forget that we still have those lingering regulatory issues that investors are worried about. As we look at what's happening in Europe, markets on that particular front, taking in the German election results, which were seen as a key risk event on that particular front. The US at this particular point, US futures looking a little bit higher. What was noticeable to me, however, was the US 10-year that is up 1.49%. That is the highest since June, and possibly increasing on economic optimism in that particular area. To talk to us about what we can expect going forward and various other themes that happened last week and they will likely play out into this week, we are joined by Bright Khumalo from Vestec Asset Management. Bright, thank you so much for your time. Given what's happening now globally, I mean, I had a quick look at how the JSE opened at around 9:30 this morning. How are we faring now?
Yes, I mean, looking at the all shares up about 1/3% there. Resources are somewhat bouncing back, even though they're mixed. They're up 0.9%, while industrials are also up 1/3% there. Some of the winners that I'm seeing in my screen is Sasol up 5%, Anglo Gold up 3.5%, Glencore up 3.2%. Losers, we've got Implats down 3.6%. We've got ShopRite, which is down 3.4%, and Clicks down 3% on the news of a new CEO. So, it's all happening in the JSE.
All right. So the one thing the cool kids always say is that the internet doesn't forget. And we are expecting news. If the Reuters results calendar is correct, we are expecting results from Grand Parade Investments. And because the internet doesn't forget, I did come across an interview you did back in 2017. At the time, Grand Parade was, just going through a lot of decisions when it came to what they were going to do with Burger King. And of course, realizing the massive costs of rolling out more Burger King franchises. However, I must ask you, what has changed for Grand Parade between 2017 and now?
The internet can forget this one. It's okay. It's water under the bridge, right? With Grand Parade, the thesis back in 2017 was very simple. They had a golden goose, that laid golden eggs, which was, the casinos. And obviously, by having those minority stakes in casinos that, spewed out a lot of cash, they'll use some of that cash to, like you say, roll out the Burger Kings across South Africa. That actually hasn't played out as we're expecting, because they became so greedy, the management, that they wanted to sell the golden goose to basically fund these Burger Kings. And when you sell the golden goose, you no longer have access to the golden eggs, and unfortunately, you can no longer, get cash from those businesses because we've sold them. So that's exactly what happened there. And you fast forward, through the pandemic year, they wanted to sell out of Burger King, which they did successfully, but, at ground floor levels in terms of, how low it was as compared to what they're actually worth had we not been in the pandemic. And there's been a lot of factors that were affecting the business negatively. I, even myself as an analyst, don't even know what's left of Grand Parade today. So it's things haven't gone their way. And I'm not even going to mention, the fact that they bought rights to, roll out Baskin Robbins here in South Africa, which also flopped, face first. So it hasn't gone actually well for them. They've had several revamps of the management team, and it's kind of like every new management team that has to take on, those problems, just, make it worse and worse. It hasn't gotten better for them. So unfortunately, this is where we found ourselves. So this is the one that I can comfortably say I was very wrong on.
All right. Let's talk about your assessment of the market a month ago versus now.
Yes, the local markets a month ago, I mean, you look at the commodity prices, they were much higher than where they were. For example, you look at something like palladium or even iron ore. Iron ore was, north of $200, an ounce. An ounce there. But if you look at, where we are today, it's closer to 90 than it is to 150. So it's not looking good in terms of that. And having the top 40 basically full of these mining companies, PGMs, and the likes of Kumbas and whatnot, we've seen our market basically sag with the commodities prices. And if that recovers anytime soon, we can see, a bounce in our local markets, in terms of that. But right now, as things stand, and while there's low demand in China, which is basically one of the biggest consumers of these metals, it's going to be, hard going for our local markets.
You just mentioned China, and I can't end this conversation without asking you, what are your thoughts around Evergrande Group and how all of this drama just continues to go on?
I like how you say Evergrande, but sure, in all financial mishaps, that I've observed in the past 11 years since I've been investing in the market, there's always one, underlying theme, and that's over-indebtedness. It was no different, with Archego, mid-year. It's no different in Evergrande, which is insane for a property developer and a pseudo-REIT essentially basically being over-indebted. Even though, banks knew that, their debt was no good, they still kept on lending to this business because, in hopes that if they survive, they're going to make a lot of money back in interest payments, et cetera, which hasn't gone their way. And, you fast forward, you find yourself in Nevergrande, not Evergrande, unfortunately. So that's what's been happening there.
All right. As the week starts, key events you're going to be looking out for?
So it's relatively a quiet week. Like you're saying, we're going to have, Grand Parade with some numbers. Maybe something that's interesting to watch out for is Northern. RMP Holdings, which I don't know what's left in there as well, so nothing exciting on that front. But the big one is going to be H&M, which is expected to release their third quarter numbers. Revenues are expected to grow about 114%. And year-on-year sales also. When you look at that year-on-year, you expect 11% growth there. So it's we want to see how they are faring in terms of growing, especially in Southeast Asia, where most of the growth comes from as a company. So we'll be watching that one very closely.
All right, Bright, thank you so much for your time. That is Bright Khumalo from Investec Asset Management. Adding to his list of things that he's going to be looking out for, we do have central bankers hogging the limelight once again this week with a flurry of speeches happening from the central bank policymakers, be it in England as well as in the US. That is it from me. We're going to take a quick break. And